quick question for you all. Do you think ETH or Ethereum is just a hold or fold game? Well, my guest today thinks much bigger than Wenmoon or Lambos, because together we're going to discuss everything from programmable derivatives to a $1 billion options platform and how he's reshaping how risk is structured on chain. Because today we're going to unpack why Plaza Finance is taking on investment banks and why OptFun is going ballistic, Mav. So we're going to have a bit of fun today and hopefully talk about all this in a language everyone can understand. So enough from me. Let's get Ryan onto the podcast now. So thank you for joining me on the podcast today. Can you tell everyone listening a little about who you are and what you do?
Thanks for having me. I'm Ryan. I'm the founder of Plaza Finance and Opt.Fun. Got started in the crypto space about a year and a half ago. Before that, I was an investor at a hedge fund called Magnetar Capital. It's a special situations fund in traditional finance that manages $15 billion in capital. I was investing in things like pools of home loans, pools of auto loans, physical aircraft, music royalties, anything with a cash flow that you can underwrite and value. I got excited about the space through some of my friends from college who had started a company called Skip Protocol, which later became Interchain Labs, a great infrastructure company in the Cosmos ecosystem. But got very excited about bringing structured products on chain and creating a mechanism to disintermediate kind of global investment banks from risk structuring. Ended up building that protocol. It's Plaza Finance. It's a platform for bonds and leverage on Base. And then that's where I hope the blockchain ecosystem goes, where people are actively thinking about kind of risk return and making long-term investments. We also got excited about kind of short-term trading and high leverage trading, which is kind of the primary use case of blockchains today. So we also launched OptFun, which is a platform for 1,000x leverage trading over 1 minute on Hyperliquid. So I've gone both ends of the spectrum, the full degen for the crypto natives today with OptFun and kind of a more institutional, longer duration product with Plaza. I think both have a home in the crypto ecosystem, and I'm quite excited to be here.
Oh, excellent. Well, what an amazing story there. And I don't want to leave anyone behind here because the crypto space is so large. There's so many projects out there right now. So for people that are listening, hearing about you for the first time, can you tell me a bit more about what Plaza Finance is building and also what problem you're solving with programmable derivative tokens? Tell me more about what you're building here.
So Plaza Finance is solving the problem of the spectrum of risk return profiles in the blockchain space are quite small. You have extreme forms of leverage, which I guess OptFun caters towards, and then you have spot tokens. But the majority of finance in traditional finance happens somewhere in between kind of a treasury bill and extreme forms of leverage. But that kind of wide array doesn't exist in crypto today. So we can take assets like Ethereum, Bitcoin, or even tokenized real-world assets like real estate and split them into different risk-reward profiles that suited to different types of investors. We launched a bond backed by Ethereum that pays USDC yield. It's called bondETH. It's for investors who want kind of a more stable return and yield than they would get from just holding ETH. And then we launched levETH, which is more volatile than ETH. So you have kind of greater returns if ETH price goes up and greater losses if ETH price goes down. But it has an interesting property of being kind of liquidation free. Some things we're working on are rolling out a similar structure for Bitcoin and then generalizing the protocol such that anyone can create any risk return profile on top of any asset. So you can imagine a world where an asset originator kind of tokenizes something like a pool of mortgages. And instead of going to Goldman Sachs and saying, hey, I want to finance this with a bunch of bond offerings, I can do it for free on the blockchain instead of paying millions of dollars in fees. and kind of instead of paying Goldman Sachs, kind of they earn kind of a share of the Plaza protocol from doing that. So a total inversion of the fee structure to kind of disintermediate Wall Street from risk structuring and give it back to kind of the people that drive the core value, who originate and purchase assets.
And before you came on the podcast today, I was reading that you'd launched on Base and saw over 600,000 testnet users and over $1.5 million in early deposits alone. So what do you think is driving this level of engagement? Because I hear a lot of stories in this space around engagement, around adoption, but you guys seem to be doing something right here.
Yeah, thanks for that. We were quite excited about the Base ecosystem. Coinbase has proven that they're the one centralized exchange who you can kind of trust to not rug you. And the reason you can trust them is because they are the custodian for basically 90% of the Bitcoin and Ethereum ETFs that are out there. So even if you buy a Bitcoin through an ETF for regulatory reasons, for tax reasons, whatever your reason may be, the actual assets are sitting in Coinbase. The biggest institutions in the world are trusting Coinbase to hold these assets securely. And Coinbase maintains all of these institutional relationships. So when we were betting on kind of institutional capital coming on chain and seeking kind of blockchain-based decentralized structured products, the venue where we thought that they would want to purchase these assets is Coinbase's blockchain, which is Base. They have interesting trust properties that they inherit through using the Optimism stack. They have a extremely large user base. We thought they were extremely focused on kind of building a great UX around Coinbase Wallet and the new Base app. So Base has been a big driver of kind of where those users came from. And I think excitement over kind of the institutionalization of blockchain drove a lot of kind of organic user growth to our platform. Our testnet on Plaza Finance went viral for a bit because of an attractive points incentive, which is always fun. And then the kind of initial deposits that I guess now have grown to 2 million since the protocol has been live are primarily from regular people, ordinary retail investors. We refused to do the sketchy market maker bribed liquidity deals. We wanted to focus on kind of organic growth on that front. So it's people who are excited and to hold either bonds or leverage. I think a lot of people have experienced the pain point of getting liquidated on a perpetual futures exchange when they're using leverage. Those investors like the liquidation-free aspect of levETH. And then there's a bunch of people around the world who want a stable investment on blockchains. Their alternative right now is they can hold stable coins with zero yield, whereas bondETH offers a 10% real yield. It's slightly more risky than a stable coin, but an attractive point on the risk reward spectrum for kind of users that need some amount of yield to help fight inflation while holding their assets safely on a blockchain.
So for people listening outside of this space, how do bondETH and levETH, how do they work in practice? And what is it that makes them attractive both to institutional and retail investors alike? What is the secret here?
Yeah. So users deposit ETH or liquid staked or liquid restaked flavors of ETH into a smart contract on Base. That is basically the Plaza protocol. And those assets sit securely in that smart contract, and minted on the other end are bondETH or levETH. bondETH and levETH represent different splits of the returns of that big pool of ETH liquid staking and liquid restaking tokens. So when you contribute assets to the protocol, you get assets back. And those assets are better suited to kind of what your individual risk return tolerances are. So bondETH is for those who want stability and yield. levETH is for those who want leverage. And essentially, they're always backed by this pool of assets that are both securing and benefiting from the Ethereum network. So all of the assets in the pool are staked and earning some yield and contributing to the economic security of Ethereum. And the returns of that big pool are split between bond investors who get kind of a fixed stable return, and leverage investors who are basically paying out that fixed return to get access to the returns of the entire vault.
And liquidity and integration are always key in DeFi. So how are these tokens being used across multiple platforms? And what role does Ethereum staking play in your model as well? I know that's something that always excites the communities.
Yeah. So Ethereum staking is great because it helps us maintain kind of alignment with the Ethereum ecosystem. It helps ETH get locked in kind of a vault that helps secure the Ethereum network. And also it benefits the protocol. So bondETH and levETH holders get the nice tail end of earning some yield for providing the security to the Ethereum network. But integrations are quite key. We view programmable derivatives, which is kind of the class of assets that are splits of different risk return profiles of different assets. bondETH and levETH are programmable derivatives. We view them as kind of an evolution of liquid staked tokens, where instead of just having exposure to ETH plus some staking yield, you can have a more tailored risk return profile for you. And you only get that incremental utility over liquid staking tokens if they're as liquid and usable as liquid staking tokens and have that benefit of kind of a better suited return profile for you. So for us, it was quite important to make sure that bondETH and levETH are as usable across blockchains as something like stETH or ETH itself. So right now you can swap bondETH and levETH on pretty much any DEX on Base. Some integrations that are rolling out in kind of the next few months are integrations with lend and borrow protocols. So you can lend out your bondETH and levETH or borrow against it. So different folks want to do that for a wide array of reasons, whether they want more leverage, they want to kind of use capital more efficiently. So getting bondETH and levETH integrated in capital markets, very soon you'll be able to bridge it to different chains beyond Base. So if you want to use your bondETH and levETH in a protocol that exists on Arbitrum, for example, that should be flexible and available to you. And how we were able to kind of unlock all of these kind of interesting integrations is bondETH and levETH are ERC20 tokens. So the same type of token standard as kind of USDC on blockchains or any other kind of major token. So it's very easy for other protocols to basically build on top of bondETH and levETH. Which every new integration we think drives more value to bondETH and levETH holders by giving them more ways to use their assets.
And before you joined me today, I was doing a little research on you and a few things I've got to bring up here. I mean, your newly launched options trading platform called opt.fun, that recently surpassed $500 million in trading volume, which is just incredible. So what do you think that says about the appetite for options trading in crypto right now? It feels like incredibly exciting.
So since we made that 500 million trading volume announcement, we are now closer to a billion. And we've been live for about a month with it. It's a pretty strong signal that crypto native users want short-term forms of speculation with a lot of volatility. It was a very clear observation for us based on meme coin volumes, perpetual future volumes, that kind of crypto users today that are often looking to make or lose generational amounts of money over a very short time horizon for better or for worse. And the venues that they were doing that were primarily meme coins, we viewed as quite bad. If you're not part of the insider group launching a meme coin, you're likely the person getting sold to or rug pulled on. So we wanted to create a venue where you can take that much volatility. We're kind of libertarian in our view that people should be allowed to invest in kind of whatever products with as much risk as they want. But at least have it be on a fair venue where you're not going to get rug pulled or dumped on because the underlying assets are extraordinarily liquid. Where we landed was 1000x leverage in the form of short form options. I think the appetite for options in crypto has been historically quite poor compared to other forms of derivatives like perpetual futures. That's for a lot of different reasons. Perpetual futures are a linear product. It's easy to understand. Your returns track kind of Bitcoin or whatever asset you're betting on plus times some amount of leverage. With options, there are some attributes of non-linearity So changes in underlying volatility can kind of change the value of options. But options are a great product for creating extraordinary amounts of leverage over finite periods. So we managed to find a way to package options in a way that's very consumable to kind of a non-trader technical investor, and make it so it's simply like, hey, do you think Bitcoin is going up or down in the next minute? Here is a prepackaged options trade. There's two buttons, long or short, and a leverage slider. So it makes it really fun and engaging. So we view OptFun as kind of building a gamified experience around options trading to make options trading more consumable to kind of the average user. So the average user can experience the benefits of trading options, while also creating it extraordinarily fun and engaging so that we can build liquidity organically around an on-chain option order book and play for the biggest win of bringing all options trading onto blockchains where it's decentralized, permissionless, global access, all the good attributes of blockchains is where we hope that the options market settles. OptFun is a gamified way to try to win it.
And you mentioned the average user there. I'm curious, what do they look like? What kind of audience are you appealing to with this product? And what do you hope to achieve in the long term with this? Again, it feels like there's real momentum behind it. I'm just curious who the audience is. Is it just the crypto community? Is it beyond that? Is it mainstream? Who are the audience?
Yeah. So with Plaza Finance, the audience was very much long-term oriented investors, people who are investing for, I would say, 6 months at the minimum, but looking to invest for ideally 5 or 10-year horizons on great assets like ETH, bonds, and leverage. With OptFun, it is a totally different segment of the market, and it's people who are trading over very short time horizons, trying to make or lose a lot of money. So on one end of the spectrum, we have kind of the degens of the world, the people who are trading meme coins, who are deep in the trenches. And they're the ones who are primarily trading through kind of the UI and playing the options games. And then on the other end, we've seen very quanti technical folks building things like bots that are providing liquidity on this permissionless options market. So it's become a venue where it's like degens versus quants battling it out on this on-chain order book, all trying to make or lose huge amounts of money, which is a very interesting and exciting dynamic. Robinhood has done a great job of kind of familiarizing people with short duration options. So they launched 0-date options, so 12-hour options a few years ago, and that does billions of volume a day. So there's already this group of people who are used to trading kind of short duration options. We've turbocharged that. Instead of 12 hours, it's 1 minute. And that lets you, and we've kind of 100x the amount of leverage you can have because we've made it so short duration and because we've come up with some pretty interesting innovations around how fast users can get liquidated if their position moves under collateralized, to make such a market safe and possible. And what we've seen with that is, yeah, it's as exciting. It's as exciting as you can get in crypto, and far more exciting than the 0 DTEs of Robinhood. So it appeals to kind of the folks who are trading with high volatility.
Love it. And if we were to look at the broader DeFi space, especially as we're reaching the time of year now where we've got one eye on 2026 already, where do you see the most potential for growth and innovation over the next, 6 to 12 months? Anything excite you here? Where do you see that potential?
Yeah, I think we've gotten to a very exciting point in DeFi's life cycle. I think there was a ton of innovation in 2020, 2021, 2022 around new DeFi primitives. And then for this weird 2-year period, we had a bunch of people just forking existing protocols and launching it on new chain that spun up. And I viewed that as not a fun time in DeFi. But now it seems like the market has lost all those people out, and the focus amongst builders is introducing new things that have never been done before. Programmable derivatives from Plaza, totally net new innovation. No one has tried it before. We were quite excited to come up with it with a bunch of researchers in a back room and kind of launch it. And the same is true for opt fun with these ultra short expiry options on a permissionless on-chain order book. So we think that the next year DeFi is a ton of experimentation, a ton of brand new products. You can't innovate this fast in traditional finance because regulatory constraints, like you have to go kiss the ring of BlackRock, Fidelity, and 10 other institutions before you can do anything interesting on blockchains. Two people working with a MacBook Pro can kind of launch something completely brand new and drive billions of dollars of volume to it. So we think in the next year there's going to be a whole kind of Cambrian explosion of new financial products on blockchains that should be exciting to new users. But I think the space goes two different ways, and I think we're playing for both ways with kind of Ops Fund and Plaza. I think the level of speculation and excitement around volatility, I think it 10x's from here in the next year. It's very clear that there's some amount of financial nihilism in the world over the traditional financial system, people not being able to afford homes, fear about AI taking jobs, and people kind of view their only avenue to kind of make or lose kind of generational amounts of money as extreme forms of speculation. And the home for that is pretty much blockchains. And then on the other end of the spectrum, we see large institutions, retirement savers, starting to explore what it looks like to use stablecoins for payments. And the next step for that is, okay, once I get comfortable holding and moving some amount of money on a blockchain, maybe I want to park it in a yield product or something incrementally riskier, but still quite safe, and start earning yield. So we think Plaza is extremely well positioned for kind of that institutional wave of adoption. So both of those are playing out. I think institutions take a little bit longer, so that'll happen slower, but I think speculation will happen quickly and always continues to happen quickly. So that's probably more exciting in the near term.
Yeah, you really are in a great position there at the moment. So again, looking ahead, how do you see programmable derivatives like the ones Plaza is offering right now? How do you see that laying the groundwork for integrating real world assets into the DeFi infrastructure? Because it feels incredibly close, but how close are we from that? And what role do you see yourselves playing there?
Yeah, I think it's very close. So we see programmable derivative as this layer above spot tokens, and spot tokens can be anything from Bitcoin to Ethereum to a tokenized stock that Robinhood is pushing very hard on, or a tokenized piece of real estate. We see this as a layer where people are able to kind of financialize their assets and get different risk return profiles that are better suited for them. So we think the world looks like, okay, you have all these tokenized assets on blockchains, but people want to craft portfolios that are perfectly suited to their risk reward tolerance. And how they will probably express those views is maybe some will do it individually and pick specific assets that they like. Others will rely on AI agents and say, hey, like, I'm okay with this much volatility and this is my target return. Make a portfolio for me that suits my investment style. And the way to get those precise risk returns splits is through taking those assets, putting them in vaults, and kind of creating tokens that are just as liquid and free to move across blockchains, but with a different return profile tied to some underlying asset. So we think that the world moves to kind of holding programmable derivatives in the same way kind of the Ethereum community moved from holding spot Ethereum to primarily holding ETH liquid staking tokens or staked tokens. So when the catalyst for kind of that transition happens is likely when we kind of push out all the integrations that make it as freely usable as these liquid staking tokens, and kind of this next wave of retail and institutions coming on chain. So quite excited to see that over the next few years, and we have the benefit of being able to ride on the coattails of folks like Robinhood and folks like Plume and Ondo, kind of driving a bunch of RWAs on chain that we can leverage and financialize.
Well, thank you so much for taking the time to sit down with me today and share so many invaluable insights from Plaza Finance, OptFun, and everything that's happening in the industry and where we see it heading next. But I want to see if there's something we can do for you now, because some of the biggest names in VC funding, business, or tech have either been guests or maybe even listen to this podcast. So is that a person you'd love to have a private breakfast or lunch with? Who would it be and why? He or she might just get to hear this, even if it's through a friend of a friend. So this is your chance to throw it into the universe. Let's see what we can manifest. But who would it be?
I appreciate it. Right now, the person I'm most excited to meet is Jeff from Hyperliquid. I've been casually watching him build for about a year. We share a quite similar hedge fund background. I've been impressed with his level of execution and how ethical he's been relative to others in the space. I like the fact that he doesn't pick winners. I like the fact that he's focused on building the best technology. And we're excited to be working with Hyperliquid on kind of OptFun. But Jeff has been quietly building in his research corner and we haven't met yet. So Jeff, if you're out there, would love to meet.
Awesome. Jeff, if you're listening, please make this happen. If you know Jeff, then please, this is your true calling to pass that message on. It's out there in the universe now. Let's see what we can manifest together. And for everybody else listening that wants to find out more information about anything we talked about today, and we did cover a lot, where would you like to point everyone if they're interested in joining your community as well, which I know is incredibly passionate?
Yeah, if you're interested in programmable derivatives and long-term investments, we think Plaza Finance is a great place. Check out plaza.finance. If you're looking to speculate over a short time horizon and are chasing kind of the next big win, then opt.fun is a great place for you to come find us.
Awesome. Well, I'll put links to everything there. Make it easy for people to find you. I'll stick a few of your social channels and Discords, etc., so people can get involved there too. But just a big thank you for starting this conversation today and doing it in a language everyone can understand. I think that's how we increase adoption too. So thank you for doing that today.
Thanks for having me. Yeah.
Whether you are here for a 1000x leverage or real world assets on chain, one of the things that stood out to me today is Ryan is building for both ends of the spectrum. So please check out Plaza Finance if you're into yield with structure, and head to opt.fun if you're ready to hit the gas. But as always, I'll be back again bright and early tomorrow with another guest. So stay curious, stay crypto, and I'll speak with you all tomorrow. Bye for now.